Hey everybody, welcome back to Hot New Homes DFW. I'm Jarishia, your favorite DFW realtor. And today I have a special guest for you, my local lender, Dorian Rogers. And she is with Utopia Mortgage. And today we'll be discussing everything you need to know about buying a home. For your first time home buyers, people that are coming back to the market, curious shoppers, all of that. So this interview is for you. I'm going to go ahead and introduce Dorian, let her tell you a little bit about herself, and then we will get started with some top questions that you may have when you're entering the market to purchase a home. Dorian, say hello to my guests. Well, my friends. Say hello to my friends.
Hi, friends. I'm Dorian Rogers. It's a beautiful day in the neighborhood with your mortgage lady in red. I've been doing this for over a decade now, and I've been in different roles within the mortgage industry. I've been the person that you call to make your payment to. I've been an underwriter. I've been an operations manager. I've been a processor. I did a little bit of everything to the point where now I am just the loan officer sometimes with a mortgage broker, so that I'm able to shop for the best things for clients themselves. To ensure that from the process A to Z, you really are happy and satisfied throughout your entire process, and you're educated and you really know what's going on. It's really big on my heart to make sure that I communicate and make sure that you really do know what you're signing at that closing table. So when you're working with the both of us, you really do have a great team that's able to make sure that when you get the keys to that house, you really are happy, satisfied, and prepared for your future.
Y'all heard it. You heard it here. I do have a question though for you, Dorian.
Yeah.
People want to know, what is your morning must-have? Is it coffee? Is it working out? Is it scrolling through interest rates for the day? Or what do you?
You know what my morning must-have is?
Tell the people.
It's coffee.
Coffee.
Most people know, even as they're working with us, they know, like, okay, one of the first questions I get sometimes is, have you had your coffee? Because I'm going to have 3 coffees throughout the day. But that first morning coffee, I definitely have to have that before I start working, while I'm doing my devotional, while I'm sitting there talking to God and getting ready for the day. Between God and coffee, that's all I need to get the day started. That's for real.
All we need is love, God, and coffee.
Love, God, and a little coffee.
And look, I had to have mine. I went to McDonald's today and I got me a caramel frappuccino. It's a small one because too much, man, do something to your stomach. I don't want that.
Too much milk.
I got mine for today. So let's get into these questions. And if y'all have any more questions, if you leave them in the comment section, once I review it, then I will ask her and I'll get an answer put out there for you. Okay? Or we're going to give you her contact information as well, so you'll be able to contact her if you have any more questions that I did not go over for today. Okay?
I think they should push it to a second Q&A. Or a live Q&A. If y'all have enough questions, I think that would be the biggest thing. Better and bigger thing, because I would love to do this one-on-one with you. So put them questions in the comments so then y'all can really make sure that we really address your questions and you can come sit with us.
That's a good idea. We'll try that. So y'all let me know if there's anything down there, and there's a lot of them. We'll get them written down and we'll do a live, or we'll do another Q&A. Okay? So today this is our Q&A with our mortgage lender, Dorian Rogers at Utopia Mortgage. Okay? Now, for today's questions, we will be talking about mortgage basics and buyer readiness. The first question that I have for you, Dorian, is what are the different types of home loans available for people?
There's so many different home loans. In our reservoir right now, I think that there's probably a good 35 off the top of my head that we can do. But let's talk about the basic ones, right? Because we layer on top of, but you can have a regular conventional loan, and that's just mainly for people that have better credit. They're able to put down 3 to 5% if you're a first time home buyer, 20% if you want to waive any escrows. We'll talk more about that. You have FHA, which is one of the loan programs that most first time home buyers that we know of have, right? So that they're able to put 3.5% down. You're able to get more seller concessions and a little bit more leeway. There's a lot of FHA mortgage protection that you also get when you have that FHA loan. Now we're looking at no cost loans. You have VA. So for our veterans, they don't have to put any money down. They are really able to buy with no down payment. Now there's still closing costs, but they have no down payment. And also USDA, if you're buying in very rural areas, there's a map that we can look at to see if you don't have to put any money down in order for you to buy with those programs. So conventional, FHA, USDA, VA. Those are our main programs. But if you're self-employed or if you're an investor, there's different programs that we have for you as well. Like self-employed, you can do a 1099 loan or a bank statement loan. If you're an investor, you can do a DSCR loan where we're not looking at anything but the cash flow of the property to get you qualified. It just all depends. There's tons of programs out there, but the program that fits you is going to be determined once you talk to a qualified mortgage lender.
Okay. And then when you talk about those who have better credit, what credits score are you looking at? What are you talking about? Which range?
So each one of these, what's required and what qualifies you is not what actually gets you approved all at the same time. Okay. So with conventional,
we'll tell them in a minute. Yeah, hold it.
Okay.
Hold that.
Okay.
Hold on. Why is getting pre-approved so important before touring homes? Or do you think it's more important than getting?
Absolutely.
So why? Why do you think so?
How are you going to buy a house if you don't know what your budget is? That's really the question. Because in our heads, right, as a consumer, even myself, I know what I want to buy. Mm-hmm. Even when I went to go buy my house, I was like, oh no, I don't want to go over a certain threshold. I don't want to go over a certain range. But that threshold and that range was a lot higher that I didn't want to go over versus what I was actually approved for. Mm-hmm. Me being in this game, me knowing exactly what I can and cannot do, I know what my threshold is, but my threshold is not realistic to my situation on paper. So getting pre-approved so we know what your actual budget is allows for you to shop happier. It allows for you to know for sure what your budget is, what your monthly payment is, how much cash to close you're going to need whenever you actually choose a house. Otherwise, you're just out there shopping blind.
Right.
And it's not free.
Right.
It's not free.
What is the difference between pre-approval and pre-qualified? Because sometimes people feel like, well, I was pre-qualified for this, so I can go look for this. Tell them there's a difference.
There's a big difference. Now, I am going to preference this. When you're working with me, you're always pre-qualified until you find a house you're pre-approved. But technically, you're always pre-approved when you're working with me. The general mortgage way of this is the fact that we say pre-qualified when we don't look at any of your documents. We have not verified what your pay actually is. We have not looked at your bank statements to see how much money you actually have available. We have not really reviewed your credit, or we may have done a soft pull on your credit and not a hard pull on your credit, because those two things can give us two different scores. So that's a pre-qualification when I haven't really verified anything. You're really pre-approved when I've looked at your documents. I know for sure what your debt to income ratio is. I know for sure what the real credit score is that I'm using. I know for sure how much money you have available. So I structure this accordingly to ensure that if we go under contract, nothing will fall out, you know? Mm-hmm. Sometimes people say, okay, here's your pre-qualification letter. You're out shopping, but they haven't verified any of your documents. Now you're in the midst of shopping, you found a house and you fall out of credit or fall out of that contract because now as they're receiving your documents, what they had on the application don't line up what was actually real. You want to actually be pre-approved so that we can really know. But again, with Dorian, I'm keeping you pre-qualified, quote unquote, because before you even go under contract, I want you to know what your payment is. I want you to know what your cash to close is. I want Jarishia to know how many seller credits you may even need as well. So I'm not going to send your letter out until you know for sure that you're comfortable with your numbers.
And seller credits is what I can negotiate from the seller to pay on your behalf. So that's something that I do as your realtor to negotiate on your behalf to get you what you need so you can buy this house that you want. Okay? Mm-hmm. Tell me, what is one myth about mortgages that you'd love to bust?
Our payment don't change.
Y'all hear that?
That's the one thing, and like, this is again why I say you're pre-qualified until we really do submit that offer. One myth that a lot of us hold on to is that, oh, I have a fixed rate, so my payment will never change. That's false. If you're not putting 20% down and you don't have the control over those property taxes and insurance yourself, and those two things can change, your payment's going to change. On one hand, it's a good thing because, you know, we want to have more value in our house. Mm-hmm. I want the value of my house to grow. But when that value grows, your insurance also is going to be a little bit higher because you got to have enough coverage if anything happens to that house. Mm-hmm. Your property taxes are going to be a little bit higher because now you're paying a percentage of that value instead of the value you had when you bought it. You know, so when we tie your taxes and insurance into your payment, if those things change, your payment's going to change. The only thing that stays fixed on your payment is your principal and interest payment. If you are able to just have that as your payment, then no, it will never change. But when we add in those taxes and insurance, that's the one myth that are like, no, don't feel like it's gonna be the same thing forever. Let's prepare you now for your payment so that if it goes higher in the long term, you're still happy and you're still able to afford it. That's why we do what we do. And that's the one myth. I hate it. I'm like, oh my gosh. It's like renting in a sense, but not like renting at all at the same time too, because you have so much more control.
Yeah. What credit scores do buyers typically need to qualify?
So let's talk about the credit scores.
Let's talk about credit scores, credit, income, and qualifying. This is what we're talking about now.
So with credit scores, the minimum credit score needed is not always the score that's going to get you approved, right? So we talked about conventional loans and how I said you need a higher score really in order for me to get you approved. Now the minimum qualifying score for that is a 620.
For conventional?
For a conventional loan, yeah. But the most of the time right now in today's world, in our systems, if you're not putting 20% down with a 620 credit score, I'm not going to be able to get you approved. So I really do reserve this for people that's at a 660, 680, 700 credit score, because their debt is probably going to be a little bit lower. They have lower credit risk on their credit profile. So really, if you're going to do a conventional loan, I'm looking at a 660 and above kind of credit score. But the minimum qualifying score that you need is just a 620. Now with FHA and VA, we can go down to 500.
Oh, y'all get that?
A minimum score of 500.
500 credit score.
But everything requires something, right? Everything requires something. With FHA, we can go down to a 500, but you do have to put 10% down. If you want to put the minimum 3.5% down, we need a minimum of a 580 credit score. Even with my 580 credit scores, I need you to have some kind of savings to eliminate some of the risk on your credit profile. You didn't get a 580 overnight, you know? So it took some work in. We got to show that you got something to boost you up on the back end.
How much do they typically need to have saved?
2 to 3 months.
2 to 3 months of a mortgage payment. So if your mortgage payment is $2,100, you need about how much, y'all? Do the math.
63.
Okay? That's what you need in the bank as a reserve if you have like a 580 score and you're doing an FHA loan.
Yes.
Okay.
Yes.
How does someone know if their income is enough for a mortgage?
Oh, this is why you got to talk to a mortgage lender, you know, because everybody's situation is totally different. What your income is and how that's going to determine what your mortgage is going to be really do determine on that debt to income ratio all at the same time. So I can't really say like, oh, I make $5,000 a month, I can go buy a house. Okay, let's break that down, right? Like that's where we're at. If you're making $5,000 a month, typically for us, we're going to pre-approve you off of your debt to income ratio. Let me break that to 50%. $5,000 gross a month is now $2,500 at 50% debt to income ratio that I'm able to use. If you want a mortgage at $2,000, then I only have $500 to fit all your debt into it. So if you're making $5,000 a month and you want a $2,000 a month mortgage, which is equivalent to a $200,000 house, that's all the house that you're going to be able to afford. That's how much income you have to really be able to afford this. And that's if your debt fits into that $500. So that's why you have to talk to a mortgage lender so we break down that debt to income ratio. So you really know what your income allows for you to buy, what your debt allows for you to buy, because your income is only one of the contributing factors that really allows us to know how much house you can buy.
Okay. And then I was going to ask, since we're talking about debt to income, can you explain the debt to income ratio and how it's calculated?
Absolutely. So in that scenario, $5,000 a month, we're going to calculate your debt to income ratio by adding in the new mortgage payment, okay? Not what you're paying now, a new mortgage payment. So it was $2,000 in that other scenario. Plus your debt, where that was $500 in the other scenario. So your new mortgage payment, $2,000 plus all of your debt, $500, that's $2,500, divided by your gross monthly income. That was the $5,000. That give us 50% debt to income ratio. Okay. Just know that it's the new mortgage payment plus your debt. It's not just debt to income. Like it's not just your debt divided by how much money you make. that new mortgage payment plays a crucial role in that debt to income ratio.
Okay. Now we're going to talk about down payment, assistance, and closing costs. What is the minimum down payment a buyer should plan for?
3% at all times. Like, if you can't get the seller to cover all the closing costs, I need you to at least have your down payment, right?
Because they're two separate things. Down payment and closing costs are two separate things. Paid together, right?
Yeah, you gotta bring it all to the table.
Okay.
So even as, like, when I started getting into the process of talking to people, I take away the words down payment and I take away the words closing costs. I take away the word prepaids, and we only reference your cash to close, right? Because there's so many different things that go into that. But when you're knowing for sure that you want to buy and you need to save for your down payment, save at least 3%. So for any and everybody, that's going to be anywhere from $10,000 to $15,000. If you can save that amount, that's amazing. Or if you need a plan to save that amount, that if you don't have that amount now, that doesn't mean that you don't apply now. You go ahead and apply so we know for sure how much money you're going to need, and we find a plan to help you save that all at the same time. But $10,000 right now is the goal, is what I tell most people. Try to get that saved if you can.
And y'all know y'all can get that from, what resources can they use to have that type of money that they need in the reserve? They can use income taxes,
401ks, our stocks, your life insurance if you have face value on your life insurance. Like, there's all kinds of ways that we can use, or all types of banks, money situations that you can utilize in order for you to have those funds at the same time.
Okay. And then are there any helpful programs for first time or low income buyers?
Yeah, so I feel like, again, everybody's situation is totally different. We're girls, right? Like, I don't like for anybody to tell me what I can and cannot do. So I don't tell anybody else that.
It was just me.
Yeah, I mean, we're different. We're friends. But when it comes to the first time home buyers and low income buyers, there's definitely TSHAC, TDHCA, DHAP. City has government assistance that actually allows to cover your down payment, and you only have to come in with your closing costs. Some city assistance cover everything for you. So there's definitely programs out there, but the whole spiel about knowing your options is true, because yes, these programs are there and they're really there to help you, but you need to know your options of how you can help yourself. Do you really need to utilize this program, or can you take on other ways? So if you have that money saved, do I really need to save this money to use later? Or can I use this money now to pay for my down payment? Knowing your options of the programs versus how the loan is structured without that program is going to be crucial to you as well. But you can get, we had a client get like $20,000 on the first time home buyer program, and they didn't have to bring any money to closing.
They actually got a check back.
They got a check back at closing.
Because I also did get some seller concessions too.
Yeah.
So they got them a check back at closing.
So these programs can be very, very helpful, because I know I talked to Carlos not too long ago, and he was telling me how, they use that money to go towards their furniture and everything else like that. Yeah. So it can be very helpful. Just know your options so that you know for sure what's going to be best for you and your family.
Yeah. Okay. What hidden or surprise costs should buyers expect in the mortgage process?
There's so many hidden costs. You really need to know, who are you working with? If you go with a new build company, they have a lot of incentives for a good reason. They own the builder, they own the title company, they own the mortgage company. So sometimes they take and embed some costs in different ways so that they're able to give you the $30,000 to $20,000 that they're able to give you. They may charge you a inflated origination fee that may or may not have to be there for different types of lenders. So looking at how much money you're paying towards your rate, looking at origination costs that may not be there, knowing that you are going to have to pay for an appraisal or having to pay for your flood cert or your credit report. These are costs that are all embedded in there. But the sneaky ones are those real origination costs or us collecting too much money in your escrow accounts that don't need to be collected. We only need to collect 2 months as a cushion, plus the months that we need to collect for us to pay it out next year. But sometimes they collect too much, add in extra money where it looks great on paper for you that you're not bringing in a lot of money, but they're also taking money from you. So even when you have your loan estimate or that P worksheet, having another lender look over it sometimes to ensure that you're not getting taken advantage of is a great thing to have.
Keeping in mind, so what she's saying is also when you're out shopping for, when it's time that you're ready to purchase a home, when you're applying for a mortgage, it is okay to shop your lenders. Okay, you can get 2 to 3 within a certain time span. I want to say it's 14, and it counts just as one hit on your credit. So you can shop for lenders. You can shop for rates, is what we call it, shopping for rates, to see who's going to give you the best deal.
Yeah.
Okay. She's great. Let you know she's great.
And I'm a mortgage broker. I already have different lenders underneath me that I'm shopping for the best rate
so
for
you. Shop them for you. You don't gotta. You don't. That way you ain't gotta do.
You ain't gotta do all that.
You can do one. Come to her. We got you.
My biggest thing though is just because we work with a lot of different people, and I may pre-approve you, but you may go to a new build. When you go to that new build, definitely let the person that pre-approved you or the lender that you were working with, let us look over it to ensure that you're not getting taken advantage of. Because ultimately, us independent mortgage loan officers and mortgage brokers, I'm not selling you particularly the rate, I'm selling you the customer service. My level of care is something totally different. You're a real person to me, like I'm a real person, versus just being another number in this book that we got to keep going.
Okay. Let's talk about interest rates and timing. How are interest rates set and what causes them to change?
So I can write a whole book on how interest rates are set, okay? There's so many little, small, minute, but actually big things that go into contribution of how rates are, okay? So we have mortgage-backed securities, and we have mortgage-backed securities. That's what drives the rate. Mortgage-backed securities are determined between the Treasury yield and the Federal Reserve. The Federal Reserve does not control the rate. The Federal Reserve is the set rate for the Federal Reserve, not for mortgage-backed securities. Mortgage-backed securities look at those things in total, though, to say, okay, well, if your rates are here, I need to set my rates here. But the supply and demand that we have changes those rates, okay? So it really depends on how much the investors that are buying your mortgages want to pay for those mortgages, okay?
Is that where the supply and demand comes from?
Because yes, we're selling you a mortgage, right? But somebody has to buy that. Who you're making your payment to, they're the ones collecting the interest, okay? And then when they collect that interest, that goes up to Fannie Mae, Freddie Mac, Ginnie Mae, Veterans United. It goes to another person and they collect it too. They have to see what that demand is. So when there's more demand in the market, rates go down, but the prices of houses go up, right? Because the demand is there. But when there's no demand there, you see rates go up. That's why rates right now may be in the 6, 7s, which this is normal. Rates have been the same for the last 3 years, you guys. Rates have literally been the same for the last 3 years. No, they are not COVID rates, but the rates have been 5, 6, 7% for the last 3 years. It's just where rates have been and where rates were before COVID, all at the same time as well. With that being said, though, there was no demand in the market after that influx of everybody buying houses during COVID, right? So rates did go up because we're not selling like hotcakes anymore. But now that the demand is coming back, because we're now in the buyer's market, rates are shifting down. You're seeing more people close in the 6%, 5-6% range than you see them close in the 7% range. But the prices of houses are now also going up.
Right.
So how interest rates are set are through the government at the end of the day. Mortgage-backed securities, Treasury yield, Federal Reserve. How they change really do depend on us, though. Are we influxing the market or are we out of the market? What is buyers really doing right now so that we really know how to set those rates? And on top of that is how many people actually have jobs? What does the jobs report say? Or is there more people having unemployment? If that's the case, then we know that people aren't able to afford this. Rates are still going to be higher. Is inflation still high? If that's the case, people can't afford this. Rates are still higher. Everything that's happening in the world influences what interest rates are.
Okay. And keep in mind, you guys, mortgage rates during COVID, that was an anomaly, right, y'all? This is not something that happens all the time. This is something that we're not going to go back to. We are not going to have another COVID in Jesus' name. Okay, so those rates were not normal. What we have right now are normal rates. Okay, don't get used to the fact that, oh, I want to raise in the 2s and the 3s and the 1s. Negative. That's not going to happen, baby, because we're not going back there. Okay, we're going back up to the normalcy of the world now. So we're back in normal times, normal rates, 5, 6, 7, 8. So, you know, I think my mom bought her house, might have been 9%, but that was normal back in the day. I had a mentor at a previous brokerage who his rate when he bought his house, normal rate, but guess what it was? 18%. 18% when they bought that house.
In the 80s, that's really what rates were. They were fluctuating between 14 to 18%. Yeah. And they were buying houses.
And they were still buying houses, y'all. So, y'all, if you're waiting to rates to go back down to them 2s, and you can stop that.
It's not going to happen.
We're moving past
Even
that.
If you see it with the builders right now, they advertise that they have 3.99% rates. But what you're not knowing is that this is a buy down that they're advertising. Your first year in your mortgage, your rate's going to be 3.99%. But then that second year, your rate's now 4.99%.
And your third is going to be
5.99%.
Unless you get a builder who is going to be a flat rate of 4.99, and that's what they're doing. But it's going to come at a cost. It's going to come at a cost regardless. But you have to decide on what you want. You have to decide on what you want.
Yeah. It's not all about rates. It's more about affordability.
The payment. Can you afford the payment?
Can you afford the payment?
If you can afford the payment, don't worry about the interest rate. That has nothing to do with what it is we're trying to accomplish, which is, can you afford that payment?
Yeah.
Okay. Process and expert advice. Okay, we're going to get that from her.
Okay.
From application to closing, how long does the loan process usually take?
Can I ask you that same question?
Oh, yes.
How long does it usually take with us?
Well, with us, we're looking at about less than 30 days.
For sure.
We have closed as soon as 8 days, 7 days, 8 days.
Yes.
The longest was like 28 days, but it's still less than 30 days. The shortest time was about 7 days. But yeah, that's what we got.
So you really know.
28. Yes, but I'm paying attention.
You really know, because that's the quickest we can get something done from the time that I do your application and I receive your contract to the time you are sitting at that closing table. That can really be 7 days. It can really be done that quickly in 1 week's time.
If you are on top of your business.
Yes.
As well as we on top of ours.
Yes.
We stay on top of our business. But if you're on top of your business and you're delivering documents as she requested, and the items that we need, we're on it.
It's really quick.
It's really quick.
It really, honestly, I work off of everybody else's time. It's not really, because one, I don't want to force you. It can happen quickly, but are you really ready for it to happen in 7 days? Are you ready for it to happen in 14 days? Like, if you're not ready for that, I don't want to push you into anything. But typically, like right now, my turn time from application, or from the time I receive the contract to the time that they close, probably about 16 days. And that's with us waiting a week for an appraisal. That's why it's 16 days. Now, from application to closing, when you initially do your application, because I do all the heavy lifting up front, sometimes it may take you 24 hours to get pre-approved. Sometimes it may take me 2 months to get you pre-approved, because everybody's situation is totally different. It may take you 2 months because I need to verify your employment, because you don't have just regular pay. You get paid different hours, shift differentials, you get overtime, you get bonuses. I want to make sure I have all that right. We may need to work on your credit. Your credit score may be qualifying, but we may need to boost it up just a little bit so that you have an automatic approval and I don't have to be more intrusive all at the same time as well. So that application part, for you to actually be pre-approved, it can take anywhere from 24 hours upward, because it really depends on your situation and where you're at. But once you get that pre-approval and you have a house,
it's go time.
We're done. We're getting you closed. That's the time for us to kick up our feet and do what we need to do.
I want to say this. I want to add this too. Sometimes people have credit card debt, right? You have debt that's affecting your credit, right? And I want to say that sometimes people are hesitant on applying because they feel like, oh, I have credit, I need to pay down that. You don't got to worry about that. There are ways that we can work around that. We can work with you on that, as far as we can actually pay that off at closing.
Yes.
And guess what? When we get them seller concessions, baby, we can use that money right there to pay your debt down.
Yes.
What you saying?
Yes.
Either way, there's a way. When there's a will, there's a way.
There's always a way.
There's always a way. Okay.
Yes. I'm going to let you know for sure what credit card debt you need to pay down. Because
don't just start paying off stuff.
Because that may or may not even help you.
Yeah.
Like paying, yes, we all know keeping a low utilization on our credit cards drives our credit. So yes,
30% or below.
Really 10%. 10%.
10%.
Millionaires keep it at 1%.
Oh, well, we ain't there.
We're going to be there one day.
We're not there today.
But we're going to work on 10% and lower as of right now. Okay? 30% is ideal. It keeps our credit looking good. But when you get down to that 10%, you'll see your credit score start to grow. Let me look at it. I'm not even going to say all mortgage lenders, because all of us are not the same, unfortunately. But for me, I love credit. I remember when I had a 590 credit score, and now I'm not there no more. I'm really part of the 700 club, which is amazing, but it took work.
It's work because I had the same thing. It took me some time, but it was worth it for me because I had a goal.
I'm not going to tell you anything that I haven't done myself that I know for sure is going to work. And if we really have to send you to credit repair, that's because it's beyond us. It's above our means. We need that expert person to come in. Let us look at it, or let me look at it, so I know for sure what I can tell you how we need to go about doing things before you just start paying stuff off.
Yes. I'll ask you this. What are some red flags that delay mortgage approvals?
So that's why it takes 2 months sometimes, right? Because I see those pay stubs and I'm like, okay, you have shift differentials, you have your base pay, you have this pay, you have that pay. I need to go get a verification of employment. I need your employer to tell me what it is that you're doing or how they're paying you, not really just me looking at your pay stub. Or if you don't have all the money right now, that's going to delay the full pre-approval in a sense, because I want to make sure that you are not chasing the money right now to get it and then you won't have that money later. Like, we need to make sure we have a full plan of how we're going to go about some of the money.
Another thing that can delay too is them not having their not have done their taxes.
Oh my gosh, yeah.
In the last 3, 4, 5 years.
Yeah, not having all your documents is going to be one of the crucial things, because I can't say yes if I don't know. I'm trying to protect you on the back end to ensure that we don't fall out of contract. So if you don't have all of your W-2s, you don't have access into the IRS.gov website to get your transcripts so that we can just see it. You haven't filed your taxes. You haven't renewed your ID and it's expired.
You cannot apply for a mortgage loan without a current valid identification.
You can apply, but we can't close.
We can't approve you.
I can't close. I can't do anything. Making sure that you have your documents, that's the most crucial thing. Because, I mean, there's only so much of making up documents that anybody can do for you. Like, I can't access your really IRS.gov website. Now it requires your Face ID in order for you to get into that. So I can't log in for you and get those things, so making sure, honestly, and then making sure that you're not trying to give me fraudulent documents, because it's going to get caught. There's nothing that you can do in this process that is not going to come back to me and I'm going to figure it out or find out some way or another. Like, let's talk about it. Let's just tell me the truth up front.
Yes, be honest, y'all.
And we're good.
Come in here lying, because the truth always comes out. What's done in the dark is gonna come to the light. That's not that's not a fake sin. That's real life. That's for real. Okay, what's done in the dark will come to light. And if you're lying, she's gonna find out.
It comes back up every single time, y'all.
Tell the truth. Just be honest. And then another thing, if you have more than one account, honey, tell her from the jump.
Please give me everything.
Don't just pick and choose what information you're going to give her and what account you're going to give her. So, they won't think I have this because I can't qualify for this. Don't do that. Tell her everything.
I am not Social Security. I'm not benefits. I don't care how much money you have in your accounts.
Here to get you.
The only reason why I do care how much you have in your accounts is so I know if I can have savings to eliminate some of your risk that will have associated. I need to see everything. I will take some things out. I won't show the underwriter everything. They may not need to see everything, but if I don't see everything myself,
they're not watching this video.
My underwriters know.
Oh, okay.
I'll tell them. Okay. I'm not gonna show you everything because everything is not their business. It's not. But it is my business. It is my business. Show me everything so then I can help structure it accordingly and we do the right things that's gonna benefit you and your family.
Okay. Tell my viewers, what is one piece of advice that you would give to someone just starting out in the home buying process?
Apply.
Did you hear that?
That's the easiest piece of advice that we can give. You're not paying me to do this. You're not paying her to do this. If you really want to know what your situation is and if you really want to buy a house, apply so that we can really set you up on a plan. Because you never know, you might just be qualified now and you're just holding yourself back. Mm-hmm. Or you may really need a plan, but you're trying to do things yourself and you're not doing all of the right things. Mm-hmm. If you just apply, we'll get you on the right track and get you a plan set up so that you know exactly what you need to do to accomplish your dreams and your goals.
Where can our listeners find you or get started with the loan application?
So we'll definitely have the link below.
I'll put that in there.
Below so that you can definitely apply now if you want to. Otherwise, you can always find my link on Instagram at Dorian Rogers _MLO or Facebook Dorian Rogers and the business page will come up.
Okay. If you could give one golden nugget to my future buyers out here, what would that be? Other than apply. But we need a golden nugget.
I think we said our golden nugget too. Don't lie.
Don't lie, y'all.
Just tell us. Just tell me what's going on. We more than real estate advisors, we're also almost like therapists.
Oh yes, Lord. I need a hat. Yeah. As a realtor, as a loan officer, we get it all. We get it all. Things happen in life, and sometimes you need to get that out. We're here to listen.
I am.
And we give great advice. We become more like friends. Other than business partners, we're partnering with you to conduct this business with you and for you. But we are family.
I'm family.
We are family.
I want to be family at the end of the day when we're done with this.
We're
so
coming
don't
over for cookouts.
Yes.
In fact, one of my clients that I just closed wants me to come over for dinner. Like I do that. We do that. So we're family, and we're here to help you from the beginning to the end and then beyond.
And beyond. Like really Buzz Lightyear. From infinity and beyond. It's really, that's the golden nugget. Don't lie. So I can really become family and we really get you to the finish line. Like I'm here to hear all the stories. Like it's crazy enough, but we're really here to hear all the stories. Because if I don't know your story, I don't know how to help you.
Yeah. And then you'd be surprised the things that we can do for you if we know what's really going on. We have had buyers who needed some things just to close, and we stepped in to help them out. We can do that, but we have to know. We have to know up front, and you have to be honest with us. Just be honest, and don't lie to us because she's gonna find out. We're gonna find out.
I'm gonna figure it out sooner or later. Let me help you how to make the lie good, okay? I'm just playing.
Well, listen,
let's turn the lie into the truth, okay?
I hope that y'all enjoyed this video today. This interview today was amazing. Thank you, Dorian.
Thank you for having me so much.
Absolutely. If y'all have any questions, my information is going to be below. Her information is going to be below in the description section. Also, don't forget to like and subscribe and share this channel.
Click, 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 click.
Yes, I need y'all to do that for me. And thanks for watching. DFW.